Okay, let's get started. I know we're a minute early, so yeah, I want to always use the first minute to kind of get everyone in, explain how the Twitter space is working, the topics we're going to discuss today. We're not actually going to go into the content yet. We're going to do this really at yeah, on time at yeah, here Singapore 6:30 p.m. Obviously 11:30 in Europe and early morning in the US. We do these Twitter spaces every week, Tuesday, same time, same place. We discuss current markets. We discuss general topics that are on our minds. Sometimes we talk about some mindset topics. And obviously, we discuss new features, products, updates, questions around our company, Cake DeFi, that I'm a co-founder and the CEO of. And obviously, I want to give you the chance to ask questions. We only unmute team members here, so there's no unmuting of our customers, simply because it is yeah, our company, and yeah, that's kind of the idea here. We record this, and then we also upload that onto our podcast. You can listen to that on whatever Apple, Spotify, Android podcast tools. Yeah, wherever you're doing this. I am walking outside. I take a bit of a stroll. I've had a super long day. It's a busy, crazy week, and we're gonna discuss this today. I mean, decentralized tokens launching. We're getting everything ready here, so there's like super long hours. Yeah, so I wanted to kind of take a bit of get off the desk, get outside, and do a bit of a walk. So if you hear a bit of a wind in the background or the trees, then that's just because I'm a bit of a evening stroll here. But you have my full attention. If you know me a bit, then you know I'm really a lot of a walker and talker. I love doing calls while I'm walking. I don't know, for some reason, this is yeah, where I don't know, my brain really focuses, doesn't multitask, kind of yeah, gets the attention. Otherwise, sometimes I have a bit of an attention deficit disorder where I get distracted very easy. So with this, let's dive in. Topics for today, we're going to discuss markets. We've had quite a sell-off over the weekend and then a bounce pretty much back to the old levels that we've seen last week on Monday, kind of yesterday. That was quite interesting. Obviously, all this kind of related to Corona, the COVID news around Omicron. So we're going to cover that and what could this mean? Could we see a bit of a March 2020 sell-off? I want to give you a bit of the ideas. Obviously, I'm pretty sure in the news you've heard this. Saylor, Michael Saylor, buying, I'm not even sure if you can call this a dip, but he actually didn't buy the dip. He bought the peak, so he bought close to 60,000. I'm going to give you a bit of my input there and my kind of the philosophy. Jack Dorsey, ex-CEO of Twitter, quitting, and maybe a few thoughts on that. For those of you that are interested in chess, the World Chess Championship is going on in Dubai right now. Game 4 today. I'll share a few off-topic thoughts on that in case you care. I'm a big chess fan, so obviously I'm following that. And of course, biggest topic is going to be decentralized tokens. When are they launching? How do they work? What should you be considering? Yeah, how can you maximize your profits? We're going to go into all the good stuff there. So yeah, let's kind of kick it off. I have yeah, co-host Fabio here, who's kind of yeah, really leading everything on the community side, and obviously gets a lot of the input there. Fabio, what are we going to start with? We're going to kind of discuss current sentiment. What's kind of the sentiment in the community? What's your kind of sense here? What's the idea? How does the community generally see the market right now? What's the expectations that they have at the moment on Cake around DeFi chain, Ethereum, the decentralized tokens coming? What do you sense there?
Yeah, hi everybody. It was definitely a crazy week, and it's more craziness to come. Not only because of price, but also what's happening a little bit behind the scenes, or like we started like our 11/11 promotion finished last Thursday, and was like I think one of the most successful promotions we ever had. So that there was a big demand, and we had record-breaking sign-ups and lots of customers joining the platform. Then right after that, we had Black Friday with the next promotion. What is also still ongoing. So if you haven't taken a look at it, please do so now. It's still valid until Friday. And then we had, of course, the whole voting that concluded yesterday midnight UTC. And we had some movements in the markets. I think there was lots of fear, especially during the weekend, especially I think it was Friday when all these announcements came out with a new variant and another Greek letter. And I guess it was a mini Friday dip where general markets and were dipping and liquidity was missing. And of course, Bitcoin was following along what general markets were doing. I think the S&P lost about 2%. Bitcoin was down from the highs 20%. And of course, you had Bloomberg tweeting and pushing out articles that Bitcoin is in a bear market right now. We kind of rebounded from a trend line, a target we were looking at a week ago or 10 days ago. We talked about this higher or like around 50, 52, 53,000. So we touched on the lower end of that trend line and rebounded. Personally, I think this is bullish. Not everybody seems to agree. There was a clear shift in sentiment where you see lots of people actually are being a little bit more bearish right now. And I guess that's a good thing. You were talking about this since like a month or so, that we need a little bit more doubt and a little bit more bearishness in the market. I guess we kind of have that right now. I'm not sure, like our community doesn't seem to be affected that much with these kind of news, because we clearly target investors with a long time horizon that actually are intending of holding. So we're not like the trading exchange platform. It's more our customers are more long-term holders. So our community sentiment seems pretty unaffected by it. And of course, everybody's looking forward to the upcoming tokens launch on Cake.
Yeah, I mean, you can see this with our users in general. Obviously, for us, very long-term focus internally. I mean, the company, the founders, the team, but also this kind of reflects onto our customers. I mean, it's always the culture. So, what do you take off? Two things. Obviously, today is November the 30th. In the very likely scenario, right, that we're not doing a, I don't know, 90 or 85% bounce right now, and we're crossing $98,000. It's just super, super, super likely. Let's say over 99.9% that this floor model that Plan B has is kind of not correct, right? He's probably going to get a lot of shit tomorrow, December 1st. The news is going to talk about this. The media is going to definitely talk about this. How do you see the markets reacting? Do you think that there will be people who will be selling? Do you think, I don't know, what do you think will happen? I mean, again, it's not December 1st yet, but I think we can all kind of agree it's extremely unlikely that the price within the next 12 hours is going to bounce from 60,000 to close to 100,000. So yeah, what do you think is going to happen? And then what's going to happen maybe beginning of December? Do you see anything there?
Like the Plan B Twitter account was maybe or is still the go-to place for Hopium. He got so many followers. I think he's at 1.4 million followers right now. And he was spot on with his floor model predictions for like 3 months in a row. So that gave him a lot of attention, of course. What people don't seem to know is that he's actually using free models. And one of them, it's called the floor model, is about to fail. So if we not reach, I think, 90,000 by the end of the month, so tomorrow, it will fail. And it's very, very unlikely that we actually see a bounce to 90,000. So the floor model kind of seems to be not valid any longer. What people don't seem to know, and I think what will be the main press that we will see over the coming days, is people confuse the floor model for the stock to flow model. And the stock to flow model has nothing to do with his other model. And it will take, the stock to flow model is still correct if we go sideways until 2024 from now. because the lower band of the model is actually around 60,000. So the stock to flow model would actually still be kind of valid, even if we went sideways for another 2 to 3 years from now. But this is not what it's going to be in the press tomorrow or the day afterwards. So people will say, hey, his model failed, his prediction failed, the hope unit is gone. And I guess it is maybe a slightly bearish thing, but it's also, I guess, positive for the whole space. And actually, I don't know, all models are valid until they are not. And I guess there is no one to rule them all model that will predict everything perfectly. It was kind of amazing to see that his models, or the way he predicted things, was so accurate. And yeah, so floor model failing probably tomorrow. Let's see what happens from here. Yeah.
Yeah, I actually agree. On a couple of things, I disagree on a few others. First of all, I'm always on the one hand, I'm very guilty on spreading a lot of these models on, especially my German YouTube account. I do it because it's always very interesting. But then at the same time, I want to highlight one topic that I think very, very few people understand. If you are making bets on the future and you can actually influence the future, by definition, whatever the mass is betting on has to be wrong, because otherwise it would already be priced in. So let me give you the example. If all of us would be betting on if the sun is shining tomorrow or not, even if the entire world was betting on it and everyone would say the sun is shining tomorrow, the sun couldn't care less what all of us believe. The sun is either going to shine or it's going to be cloudy, and it's going to be cloudy. So that is a really important difference. Now, in investing, if everyone would be 100% sure, imagine 100% sure that the price by the end of the year would be $100,000 for Bitcoin, where would the price be today? If we were all 100% sure, it's very simple. We would use not really a discounted cash flow model, but we would use kind of a current cash model in how much is cash worth today if I get $100,000 in the future. So we would actually get to bond payments if you kind of consider this, right? And at the moment, bonds yield around 1 to 2% a year in just like gross terms. So we're not considering inflation, 2% per year. So on a monthly basis, this would mean we would be yielding a bit less than 0.2%. So if we were 100% sure that I would get $100,000 for Bitcoin by the end of the year, the price of Bitcoin today would be very, very, very likely 0.2% below that level. And why? It's because we would all know that the price would be at $100,000 by the end of the year. So if we were expecting a certain price, all of us would agree on it. It would actually affect the price. And what would actually happen, now consider this, if the price would today shoot up to 99,000 something, so just 0.2%, but we would all know in the next months, the Bitcoin price wouldn't move much. Guess what's going to happen? Actually, people would be selling because they'd be like, man, I'm not going to make any money over the next months. I mean, I make 0.2%. Who cares? Let me go into meme coins. Let me go into other coins where I don't know 100% where the price is going. And so what this actually does, and this is what so many people in investing especially struggle with, as soon as a lot of people actually believe in a model, doesn't matter if the model is right or not, initially it becomes a self-fulfilling prophecy. But as soon as this kind of step is over, just like at the beginning, the price at the end of November right now comes to close to 100,000 because everyone is so sure it's going to go there. But then the price would deviate so much and it would go totally the extreme way because everything is priced in and we're basically completely overloaded into a certain direction. And so that is why I'm always so skeptical when a lot of people believe in a certain model and actually believe they can predict the financial markets. Many times this works in a short term, but I've just never seen it in the long term. And the very simple reason is as soon as there's a large group of people betting on the same outcome, but they can actually influence the outcome, it's very likely that the actual scenario goes the other way. And I'm generally a person who loves betting on these contrarian kind of outcomes, right? Again, I actually don't want to bet on Bitcoin going down. I actually think Bitcoin is going up. But I still believe that it's impossible to predict this, just like stock to flow or just like the floor model does predict, for the simple reason no one on this planet can predict. On Bitcoin, you can predict flow, so you can predict how much Bitcoin is actually inflated, is created. You cannot predict how many people are actually interested in selling. You cannot predict the demand side. You cannot predict market cycles. You cannot predict macro. You cannot predict any of that. No one can. It's ridiculous to believe anyone can. So all these models, maybe they kind of generate a general direction, but for me, these are absolutely useless when it comes to believing on what a price is going to do at a certain day. So that is a general idea. But I want you, the key takeaway here is, if you ever hear that a large amount of people predict a certain outcome, it's actually more likely that this outcome doesn't happen, as kind of abstruse this sound in the first sense. But that is just because everything gets priced in and small little factors can actually push it the other way. So, okay, here's my prediction over the next week, right? So first week of December, I believe there's going to be a lot of negative press that these models, and just like Fabio mentioned, they're all going to get lumped together. And basically, it's all about, look, it was all a nice kind of fluke. It was fun while it lasted, just like the time traveler story on Reddit that worked for years, right? Until it didn't anymore. And similar, like stock to flow and the floor model, and I don't know what his third model is. And at the end, people are just going to be like, look, it all is not going to work. We had this kind of fake out at 69,000. Now Omicron is coming. People are all going to panic. Travel is going to shut down again. We're going to go into lockdowns. And we're going to see a March 2020 scenario. And I think that's going to be a bit of a narrative next week. But then people are going to realize that is actually probably, like, again, too many people are too pessimistic. And then small little things, actually things that today wouldn't do anything, and I couldn't tell you what these positive little stimuli would be, it could actually then push the sentiment in the exact opposite direction. And suddenly, something that's very negatively associated, suddenly it's gonna get pushed over. And so looking at that, I was the person at the beginning of the month who wasn't sure if November was gonna get a green candle. Right now, it looks very likely that we're gonna see a red candle. We're probably gonna close under 60,000 again. It's not December 1st yet, but it's more likely we're closing below than above. Bitcoin would have to rally 10% right now. I don't see this, but let's say like plus minus. So we're gonna see a red candle in November. I still believe that we're actually gonna see a very bullish candle in December. Now, today, you're probably going to agree with me, and you're like, yeah, definitely. The key is we're only going to make this, and like, listen to this, we're only going to make this if the majority would disagree with this. If the majority next week would start disagreeing and saying, oh, crap, like November was already a red candle. Is this like 2018? Holy crap, everyone is expecting 21's doing so well. We started at 30,000. Now Bitcoin is getting into the lower 50s. Holy shit, we're actually closing lower than the 50s. Next week, we're going into the mid 40s. Oh my goodness, we're all panicking. Bam. And that's when like this overly negative sentiment can actually shift and become super positive. So that is a bit of my kind of most likely scenario that I see for December. So if I would have to make a prediction, Fabio, I'm going to be interested to hear yours. I think we're going to see a bit of a bearish first 7 to 10 days. And then I actually see a bullish kind of run with a strong green candle. Now, obviously, depending on how low we dip in this first week, it's just going to get harder or easier to reach, let's say, 100,000 or get close to 100,000. I still think we could see it, even though it's going to be a real stretch, because it would have to be like an 80, 90% plus a month, right? Which is a really, really stretch at these prices. But there's still a possibility for me there. So that's kind of how I see this. Yeah, how do you see this? How do you see this, Fabio?
Yeah, I'm looking for a close above 58,000, because if you go back to the I think 2 months ago, where we scratched the all-time highs on a monthly close, we closed I think at 57.8. So a close around that or above that would make me actually pretty bullish. I completely agree that there is a chance of let's say a few weeks, a few days of bearish action or negative price action, just because of general news in the market. But what scares me a bit, or what has me worried a little bit, is that Bitcoin is just so dependent on general markets. So on, let's say, the S&P 500. And this is also, of course, dependent on larger things like a new COVID variant and fears of lockdowns and government regulations and all of that. And I could see like some sort of black swan event that we had in March 2020. And of course, this will affect Bitcoin as well. This would be, in my opinion, very short-lived. It would be a lot of years, a big candle, a big sell-off. But what follows after that is mostly very, very bullish. And for me, it's just the entities you have, like the ECB and the Fed. If you expect them to not print money, think again, because the only reason those institutions were created, and the only thing that they do, is to help limit the potential negatives. So if there is a big drawdown, if there is a liquidity event, of course there will be no new money, and if new money comes, general markets will rebound, and also Bitcoin will rebound. So I guess in the short term, it's really hard to say if people take this, if there is a lot of panics and lots of fear. If not, it's probably bullish, and if there is lots of panic and lots of fear, it's short-term bearish but long-term bullish. So I guess, I don't know, I'm still bullish, but as you've mentioned, there could be there is a potential for a liquidity event or for a major drawdown over the coming weeks.
A couple of statistics. I love statistics for the simple reason because it shows kind of past behavior, and like I love especially statistical behavioral analysis from past behavior, being able to kind of say, you know what, history is not going to repeat, it's going to rhyme. And many times when you see that, let's say a rhyme would say, you know, everything is more likely to go left, and then the entire market is betting on the right side, but like behavioral analysis would say, you know what, it's more likely to go left. You actually have very high probabilities and very nice odds in making those bets, and I love doing that. So again, many times I'm very contrarian in how I bet, which is absolutely fine. And many times I'm wrong, but when I'm right, I'm massively right, and that's key. So a couple of things here. So you mentioned stocks and crypto, obviously having a high correlation, especially on the way down. That's key. So on the way up, it's not always correlated. So the S&P 500, for example, is actually not that correlated with Bitcoin, especially on the way up. But as soon as people move their funds into a risk-off asset, so that means they don't want to take much risk, and obviously people treat stocks and then especially crypto as very much risk-on assets, so assets that you want to bet on when you want to take risk. And they take money out when they want to go risk off, so they want to take away risk, especially in the taking away risk, these assets correlate a lot. So stocks and crypto. So here's a key statistic. Whenever the VIX, so that's the volatility index, and it kind of is also a bit of a fear index on stocks, and you can just kind of measure that, how volatile stocks are. It's similar to the fear and greed index in crypto. Whenever that index spikes, actually afterwards, over the next 3 to 6 months, stocks tend to do extremely well. So that's an interesting analysis, right? And so if you look on Friday, on last Friday, so on Friday, I think that was 26th of November, if I'm correct on the dates. So on the 26th or 25th, it doesn't matter that much. So that the Friday, so Black Friday, the Friday after Thanksgiving, the VIX spiked. So there's a very high probability. Again, this is all about probabilities. There are no guarantees in life. Everything is possible, and there's no guarantees. So that's key to understand. So it's all about probabilities. So the probability for the market, for the general market, to do well over the next 3 to 6 months is actually relatively high, based on statistics. So with that being said, it's also a very, let's say, positive sign that crypto actually has a good chance to do well. I'm not saying it will, I say it has a very good chance, because if the behavioral analysis would rather be that stocks would do bad over the next 3 to 6 months, then obviously there's a very high chance actually to say that crypto would do bad, because normally then the markets are risk off and then it takes the funds down. So I think that's the the very first kind of statement on this. So always kind of keep this in mind a bit. Second thing, one of the most interesting like calculations, especially backdating calculations that you can do is when you actually really use maximum beta in investing. So you use assets that are completely uncorrelated. For example, bonds, yeah, which are very unpopular for obvious reasons and various reasons. But if you'd combine that with Bitcoin, for example, you would get some of the most insane portfolio allocations that you could possibly have. So I just wanted to throw that in. Again, just today, with a quant, I ran a couple of numbers just for a personal portfolio allocation. It's just absolutely bonkers if you kind of look into, for example, ticker symbol TLT, 20-year, I think 20-year government bonds, and you combine that in a percentage with Bitcoin. It's just absolutely insane, the kind of volatility down that you're getting. It's very little actually, and the rewards you're getting up. So why am I sharing this with you? I'm sharing this because many times what the majority, especially in crypto, for example, would say is absolutely idiotic. For example, investing into bonds is actually true. Bonds have done really bad. But during those times when Bitcoin did really bad, for example, March 2020, bonds went up in like a week by like 20% and completely hedged the drop in crypto. And so I just want to highlight that a bit. If you're a long-term investor, and again, I assume most of the people on Cake are long-term investors, and you're also someone who can think for yourself, these are the kind of allocations that you kind of could consider. Now, especially obviously when on DeFi chain and then in a second step on Cake, obviously we're also gonna offer all these decentralized tokens that you could use to get exposure into kind of various price movements and various volatility ideas. So just kind of keep this a bit in mind on the long-term ideas here. So, and it obviously makes it very easy to go in and out of these tokens. Yeah, so this is just a bit of a rambling on some analysis that I always find very interesting. And so, yeah, I think that's key. Fabio, what do you think about Saylor buying another 7,002 Bitcoins or announcing, and I think maybe the other fact that he's buying them close at $60,000, which I think surprised many, especially Bitcoin dipping down to 54,000. So it's been like just that specific purchase is actually down close to 10% right now. Yeah.
He's not going to stop. I think he got debt issued at around 6 to 7%, and lots of people think that's a bad deal. I think he would even take the deal if it's 8 or 9%, because he has this strong belief and this mindset that Bitcoin compounds at 200% annualized, and if you think that, and if you think this will continue, it doesn't really matter how much you pay for the debt, and if you really see it long term. And I think he had an average price of around 59,000. So yeah, somewhere in between where we are right now and the peak. Some people gave him lots of negativity that he made a bad deal, but I guess this is completely short-term thinking, because if his strategy is goes over years. So if the Bitcoin price continues to do what it did in the past, so if we are higher in about, I don't know, 2 years or 3 years than we are right now, his strategy clearly pays off. And I think he owns right now 1 in every 170 Bitcoin that is out there. That's pretty crazy to think about. He bought another 7,000 Bitcoin, and lots of people, I saw lots of tweets on Twitter
7,002.
7,000.
I always wonder, why is it the 7,002? Where do those two come from? But sure.
Like there were so many tweets where people said, "Hey, what's up?" Like there was 2 months, I think 70 days or something, where Saylor didn't buy Bitcoin, or he didn't announce. He always announces afterwards. So people were kind of asking themselves and expecting, "Hey, what's going on? Is he stopping?" And I think he's not going to stop. He's gonna get more debt, and he's gonna go buy more Bitcoin. And like it's a some people say this is very risky, but yeah, if it is a high bet, or he has a leveraged bet on Bitcoin, but if his strategy pays out, if Bitcoin continues to do what it did, it's crazy, and people gave him negativity. I think he's up 2.5 billion right now. So
3.57 billion.
oh,
Yeah,
okay.
3.57 billion. Yeah.
Yeah, crazy. And you know, I guess there's not a lot of people that did better than him this year. So I guess there's a few things that he does right, but it's all dependent on where we go from here. So I like the guy. He's very outspoken, and he has his strategy, and he follows it with very strong conviction. Yeah.
I
Let's see.
agree on that, and I think what it really highlights is how the average investor, right, that has like very little money, actually, where most of the time it's completely irrelevant if that person would make a 5% extra on a deal, right? I mean, if you're investing $1 billion, 5%, man, is like $50 million. That's like tons of money, right? Especially if it's other people's money, as in his case. But for most people, right, let's be realistic here. 99.9%, when they invest, and 5% up or down, that's maybe, I don't know, $100 more or less, $200 more or less. Most of the time, it's actually very small money. And then they ponder and sit around and like, should I buy now? Should I wait another day? Should I wait 2 more days? Where's the price gonna go? And he just goes and says, you know what? In the long term of things, it's totally irrelevant. I'm gonna buy, and the prices that I could sell. I'm not saying that he will, but I am actually, if I would have to make a bet on is Saylor ever going to sell, I would say, like, I would bet on him actually selling at some point. So, but who knows? I think the probability of him ever selling is higher than not. And he's just gonna, like, probably very right in saying, hey, look, over the next 10 years, the prices that I could sell at are going to be significantly higher than the prices today. And so I think that's his entire bet. And he has just so much more time horizon, so much more vision in comparison to the average person. And again, the weird thing here is that for him, 5% up or down would really matter. Where for the average retail investor, 5%, let's be realistic, 5% on a, I don't know, $200 dollar cost averaging is $10 up or down. That's not like the end of the world. That doesn't change that much. So I always think that's yeah, super, super interesting. How do you interpret Jack Dorsey stepping down as Twitter CEO? I mean, obviously, a lot of rumors. I think on the one hand that he's now spending full time at Square. On the other hand, people rumoring that he got actually forced out and he kind of had to step down because people were already super unhappy. And I mean, you saw the stock price jump 10% after his announcement, which is really not a, I don't know, a nice sign, I think, for someone stepping down if afterwards the stock price jumps by 10%. Obviously, rumor mill going that he's going full-time crypto. There was rumors that he stepped down because now Twitter is actually accepting Ethereum. I don't know how much of that is, that have you seen as pure rumor? How much have you seen is actually fact? What are the other stories that you've been hearing?
He was very unclear what he's going to do. Like he had this open letter that you can see on his Twitter page. It was, I think, an email that he sent out to all his employees, where he explained a little bit what is going to happen, and that the new CEO took over yesterday. And like, my worry is Twitter was in my opinion, the best social media platform when it comes to free speech. They were not perfect. They infringed on a little and canceled a few people, but they are better than all the others, in my opinion. And I don't know what it means, him stepping down, if this is gonna get, like, I don't know, if there will be more censorship on Twitter. I could see that. And then also he said in May 2021 at the Bitcoin conference, he said, what I would do if I would not be CEO of Twitter, I would be full-time Bitcoin. That's a statement that he made a half a year ago. But he has not shared any specific plans on what he's going to do with his free time. It's kind of on one hand, it's like a sad eye and a happy eye. So I'm somewhere in between. I can understand why he lets his baby go and moves on. I think he also got a few comments from from other entrepreneurs in the comment section of this tweet, where they're all for this step. I guess the big question is what is he going to do now? Does he have any plans? And and the big reasoning behind it. I'm not 100% sure why he took that decision.
Yeah, let's see. Definitely going to be quite interesting. I think a lot of at the moment just more speculation. Um, One last topic before I want to segue a bit into cake and decentralized tokens and so on. I don't know if you have seen the kind of blockchain analysis on NFTs having dropped now for like several weeks straight. Obviously, there have been this very kind of polarizing view on both sides. Some people kind of talking about that the prices that NFTs had over the past couple of months. I mean, this is just the beginning, and I don't know, these stones and apes and whatever are gonna go into the tens of millions. And then obviously the entire opposite kind of opinion where people said this is completely worthless. Like these things are gonna go to their inherent value, which is zero or like cents, because that's all it kind of takes. What the value of these things is. Um, I don't know. Have you been following this a bit? Yeah, like you see that liquidity is lower, prices have been trending a bit lower. Have you been following that, or are you more of the Bitcoin DeFi kind of person that hasn't been following the NFT kind of craziness over the past couple of months, almost a year?
I definitely follow the NFT space. I'm somewhere in between. Like I think the technology itself is absolutely groundbreaking, and I could see like the ownership of a house instead of being with the government at a local file storage, being on the blockchain in 20 years or so. I could definitely see that. So I think the technology is groundbreaking. I think the thing that we are doing right now, attaching JPEGs to a hash on a centralized platform like OpenSea, is a lot of hype. Like we had something similar with naming stars in the 90s, where people were paying absurd amounts to name a star, and practically being the owner of that went away quite quickly. I foresee that there is some NFTs, like maybe punks or apes or something, that will keep their value, but I guess lots of it is a lot of hype. So I don't own any NFTs, but I follow the space quite closely. So I watch lots of YouTube videos, and I'm in Twitter Spaces, and I read up on it, and I visit OpenSea on a regular basis. But I don't own any. So do you?
I mean, to my knowledge, maybe someone airdropped me one. I have no clue. But to my knowledge, I don't own any NFT. Um I I generally I'm a very kind of left-brained, kind of a rational, I don't know, logical kind of thinking person. I struggle a lot with this art. I struggle a lot with collectibles. I struggle with the non-fungible type of things. I'm not much of a collector. I don't have many sentimental kind of association to things. I'm a very hardcore utility kind of person. And so the utility in NFTs that are like a lot of sentimental value, a lot of status, a lot of like also bragging rights, right? So this is where a lot of the utility comes from, and I struggle seeing that utility. So again, value always lies in the eye of the beholder, and for me, there's just very little value in this. That doesn't mean that I'm right. It just means that this is my subjective view on those things. Yeah, so that's just how I've always seen this. Now, again, that doesn't mean that, and we see this also in the company. I mean, we see a lot of people in Cake who are pushing for us in 2022 to do something with NFTs, and we may, right? But this has always been a bit of a internal kind of struggle for me because I have such a much of a harder time seeing utility in an NFT. And again, without utility, nothing. There's just no value without utility. You always need three things. You need utility, rarity, and people believing or people seeing the utility. And then that's where the value of anything comes from. And I just struggle with that utility. So yeah, that doesn't mean that others don't get this. Obviously, the fungible types of tokens like Bitcoin, the utility is completely different, right? Instead of a digital censorship resistant asset, completely different than something that's a way more artistic, way more right brain kind of type of thing. yeah, so that's just where my personal kind of thoughts come in here. Um, yeah, with that, I would love to segue over a bit to decentralized tokens. They got launched last week. Now, yesterday, DeFi chain released their light wallet so that everyone could start minting them. It's completely groundbreaking. We have, just like for any kind of token that we list on Cake, that is actually a requirement that we need to do in Singapore. We need to have a legal opinion that these tokens are within our licensing guidelines. At the moment, we fall under the Payment Services Act, and we would not be allowed to list security tokens. So for us, we had to get a legal opinion that these decentralized tokens that the entire DeFi chain community can mint, that these tokens are not security tokens. And the legal opinion that we have states that with a very, very, very high likelihood, again, there's never a 100% guarantee, but a very, very high likelihood these decentralized tokens are not seen as securities, which is absolutely groundbreaking because, to my knowledge, there's not a single other kind of blockchain or project that can actually say this. Actually, the exact opposite. I know on Ethereum, Synthetics went the complete opposite way and actually had to kind of stop any of those tokens, which is also quite interesting how a decentralized project can suddenly stop. This is, to me, a bit questionable, but sure. I know that also in the Mirror protocol, they had like quite some challenges with their decentralized kind of Mirror tokens. And I think they even have a subpoena from the SEC. Again, I don't really know how this, what the status is there actually. So this is super, super groundbreaking. To me, it's really the kind of, yeah, only project right now that actually has that. And I think this could be, yeah, super groundbreaking for many, many, many other companies if they want to offer to their customers to get exposure into those kind of decentralized assets. It's going to be quite interesting. And yeah, I wanted to use maybe 15, 20 minutes to kind of talk a bit about together with you on this, Fabio, answer questions from the community. There will definitely be more blog posts coming out. There will be more announcements coming out. Obviously, how you can participate, how you can use this. Yeah, and one thing I always want to distinguish here. One thing is a blockchain native function that has nothing to do with Cake. And I think many, many times people confuse that a bit. They think that Cake could create any kind of service that you can't do yourself. It's actually not true. Literally any service that you use on Cake, you in theory could do yourself. Cake is purely an agent. It's a technical facilitator that just makes it easier and provides a one-stop platform to so many different services. And that is what we take a service fee for. And so that's just kind of how this works. So what I want to do today is really kind of highlight a bit on the service that you can expect over the next couple of days and weeks to come, and how they can work, how you can get exposure to those decentralized tokens, and what, for example, a dTSLA or a D gold or a D silver or whatever other tokens we're going to have, what they could do for you and how liquidity mining with those works. I made a tweet today that on some of those decentralized tokens, once the rewards go live, and the rewards are going to go live on Monday next week, so that's November 6th. At current levels, these rewards would be over 1,000,000%, which is absolutely insane if you think about it, right? So, I mean, that's just, it's like 10,000x, right? That's crazy. It's unlikely that it's going to stay this way because people are going to find out about this and they're just going to spread the word and it's all going to go nuts. At least I expect so. But I would love to kind of dig a bit deeper there. Are there generally kind of a starting point where you would love to kind of get this, where you're like, when a newbie kind of comes to us, that's the first question they kind of ask?
Yeah, there is definitely something I want to start with, and this is like maybe the biggest challenge of implementing a decentralized product in like a Cake is sort of this agent interface between DeFi and CeFi, and there is a few challenges when it comes to that. So a new person, and I guess the most asked question within the community is, of course, when will this whole thing start? And it's kind of tough to understand for somebody that never touched these products or has not been with us for a year and saw the launch of crypto liquidity mining last year. that there is a few challenges for us as a platform we need to take under consideration. And one of these challenges is, of course, that there needs to be like some kind of base layer liquidity. Maybe you can touch on that a little bit, because like we initially said, hey, it's probably last week's Twitter space, we said, hey, it's 1 December probably we're looking at, but there's certain conditions for us that we need to consider before adding a liquidity pool onto Cake. What are we looking at there?
Maybe to get the big picture here first. I think many people look at DeFi chain or they look at Cake DeFi and they think it's the same thing, when this couldn't be like further from the truth. These two projects are completely separated now. Yes, Cake DeFi got started by u-zyn and myself, and about a year afterwards, DeFi chain got started by u-zyn and myself. But one is a blockchain that is like now a large community, where actually a huge part of that community doesn't use Cake at all, because they actually don't believe in like using a centralized company. And then we have, for example, customers on Cake who don't use a single DeFi chain service. They only use Ethereum, they only use Bitcoin, and or other things. So I just want to make this very, very clear here. Cake DeFi will always list services that we believe are advantageous to our customers on the short term, on the long term, because we are in the same boat as our customers. We can only make money if our customers make money. So, and then on a blockchain, right, like DeFi chain, obviously there's a lot of development going on, there's growth going on. There will be a lot of features and services on DeFi chain that you cannot use on Cake DeFi. And also, I want to highlight, I don't want to make any promises that we're going to list every single feature, every single tool from DeFi chain on our platform. It could be, I'm just saying, it could be because maybe from a regulatory standpoint, we couldn't even do that. Or it could be that it's just not financially interesting for us. Or it could be that there's just not enough demand from our customers. Or it could be that it's just too complicated for us to actually integrate that. And we see other features, other functions more interesting. So I want to kind of start with that, because I always believe that people kind of expect that Cake is listing everything or doing everything that DeFi chain is doing. And I just want to highlight, actually not. I actually expect, especially next year, that there will be a lot of directions and features that the entire DeFi chain community goes, where I, as a CEO for Cake, say, you know what, that's great. It's not the main priority that what we want to list on Cake. We're gonna focus on other things right now. We need to integrate other things right now. And again, I don't have a concrete example right now, because I want to kind of manage expectations in all of this. So that being said, as a whole, right, you really need to separate those two projects. The first thing now, yesterday, DeFi Chain launched a Light Wallet. The Safe guys, I think they had the Light Wallet ready last week already. So over the past couple of days, people could already kind of mint those decentralized tokens, which basically means you lock up collateral. This is DeFi Chain, Bitcoin, and stable coins. You can lock this up, and you collateralize that, and then you create one of those decentralized tokens. For example, you create DUSD or dTSLA, or you create dSilver or dGold, dS&P 500, D bonds, D MSCI World, D commodities, whatever. Like there's like, I think 15 different kind of decentralized tokens that you can mint right now. And so you can mint that, and then you can create that. And then from next Monday on, whenever you put those decentralized tokens into a DEX, then you are getting rewards. At the moment, you don't get rewards, but then, so at the moment, you can only invest in them, and then you basically hope that these prices go up or down. I mean, it just depends. And then from next week onwards, there's going to be insane rewards on the liquidity mine. So the main question that we have been getting is, so when is Cake actually listing these tokens? Now, again, not saying that we are doing this, but in theory, there's no guarantee that Cake will list a single decentralized token. I just want to manage expectations there. Totally two different projects. Now, of course, if we see that these tokens make a lot of sense for our customers, they work from a legal standpoint, they are very profitable to our customers, they are safe. Of course, I, as a CEO, want the best for our company, want the best for our customers, want the best for the team. of course, I would be stupid not to list them. So we will definitely take a look, and the main criteria we're actually going to look for before we can actually list one of those tokens, and we're going to post this also on Twitter because we're getting this question so much, is how deep the liquidity pools of individual tokens are. At the moment, and this may change, right? So this is not a guarantee. So just because a pool actually hits this limit, again, it's not a guarantee that we're actually going to list one of those tokens, but I just want to highlight that, is a minimum of $1 million in the pool. We are watching this closely. As of now, there's not a single pool that has hit $1 million. I mean, maybe right now during the Twitter space it happened, but so far I haven't seen one. I think it's going to be very likely, especially next week, that most of the pools are going to hit $1 million or more. I'm actually expecting most of the pools to hit it this week, and then we're going to take a closer look, and then we would actually list it on Cake. And here's the main reason: it's actually slippage. If those pools are too small, even though the rewards could be insane for customers, if they would use the DEX, they could lose 50% in the DEX function. And that's not something that I want our customers to get exposure to. And then in a second step, obviously, our customer support having to deal with, our community having, community manager, in this case, Fabio, having to deal with. It's a different story if you do this on a blockchain natively. You're on a blockchain, man, you're on your own, right? That's like your keys, your coins, your responsibilities. If you do this on Cake, yes, it's still your responsibility, and Cake is just an agent. We're just an execution. But there is a certain service aspect that we as a company have towards our customers, which obviously makes up the reasoning on why we actually charge a fee, and why you have a customer support, and why you can ask questions, and why you get this hand holding and help, right? And so we need to create a certain kind of baseline that we feel comfortable with, that once this baseline is hit, is not a guarantee that we're going to list a certain decentralized token, but that's the baseline that we start considering. So at the moment, I think the DUSD DFI pool is like, I think at $900,000, and that's basically on the first day. So I'm relatively certain that we're going to list it by the end of the week. And then we are watching, I think the second largest one was the dTSLA pool. So that could be happening. So yeah, and so obviously you as a customer might ask, yeah, but isn't that really unfair that people on DeFi chain can actually get access to the pool and customers on Cake can't? This has nothing to do with unfair. This has to do with a totally different feature set, right? On DeFi chain, you can actually mint tokens. On Cake, you can't. And that has a lot of reasons. Some are legal, some are compliant, some are technical. It's a lot of reasons on the actual minting. It's also a bit of an understanding of those decentralized tokens. Where on a blockchain, it's decentralized, completely different than this happening on a centralized platform. So if the liquidity pool is just too small, the only safe way to actually get into the pool is by minting more tokens. Now, since on Cake you're not able to do it, there wouldn't be a smart way to actually get into the pool. So you would actually have to do it on DeFi chain. Once the pool becomes deep enough, the slippage is small enough, the liquidity is big enough, then you can actually also like use the DEX safely on DeFi chain. At the same time, then that's when actually it makes sense to do this on Cake as well. So yeah, I just want to highlight that a bit. Of course, right? We would love to list as many decentralized tokens as possible. I mean, it's a no-brainer. As soon as it's safe for our customers can make money with it. There are very few complaints that something doesn't work. Then, of course, it makes a lot of sense for us, because obviously we also would love to make money, and we make money if our customers make more money. So I just want to kind of explain that. So when are these D tokens coming to Cake? Well, we're going to start considering the pools once they hit $1 million. Then we're going to take a look. I think the DUSD DFI pool should be doing this week. And then yeah, let's look at the others. So if you actually want these tokens to come to Cake, then create more liquidity on DeFi chain, right? I actually downloaded I didn't download. I downloaded the Light wallet quite some time ago. I created my first vault, played around with it, added liquidity, minted all kinds of decentralized tokens. I have I think the entire kind of suite there. So hey, I would really encourage you to play around with this. Maybe quickly, what are the risks, right? The risks are always that you have a liquidation risk. So that means that these tokens move against the DFI price or against the Bitcoin price. So that's always a risk. If you put those tokens into a DEX, then you have impermanent loss risk. So if you want to wait until the rewards come, I would highly recommend, right? Get ready on DeFi chain, download either the Safe wallet or download the DeFi chain wallet from the foundation team. Download that, download those two, one of those wallets. Get ready. Play around with the vaults. Play around how this works. Again, start with small amounts. Start with $10. Start with $20. Play around. See how this works. Get ready, because I promise you, next Monday it's gonna go nuts. There's gonna be insane rewards, tens of thousands of percent, especially in the first couple of days. And so, obviously, as soon as we feel it's safe to list a pool on Cake, we are looking into it, and we would love to do that. Again, there's no promise, no guarantee that we're gonna list all the pools. Maybe we don't. It depends really on how safe and how liquid we see those pools. And so, but also understand our side. We would love to offer as many tokens and pools as possible.
It's maybe to add on to this, it is a very different kind of user that we have on Cake. That like, let's call it, you have this DeFi degens. They use all kind of dexes, the DeFi chain dex, the Traders Joe, Uniswap, and everything, and they are really advanced in their knowledge. They know what they do, and they take their responsibility. There is no customer support if you use real DeFi services. You're all on your own. It's your keys, your coins, your actions, your responsibility. But we have a very different kind of user on Cake. Our users, they love our service because it's just 2 clicks for them. We have these simple mode features and everything. So you click on a button, you press 2 times OK, and you are using a decentralized finance service, but in a very user-friendly and easy way. And because we have so many of these users, we also need to consider them. And you can place a warning in big red text and tell them, hey, look at the slippage, look at what price you're getting. But most of the users, they don't read these dialogues. They just press OK, OK. And just imagine yourself using this service, and you place $10,000 into a liquidity pool, but there is no liquidity in that pool, and you just click 2 buttons, and then bam, it's 5,000. And those 5,000, you cannot get them back. What will this will result in this customer having a very, very bad experience, and he's blaming that on Cake, and he will contact our customer support. He will be on Telegram, and very, very angry. Because and this is something we need to take into consideration, because we have lots of users that are new to cryptocurrencies, that are familiar with this easy way to use our platform. And but there is some middle ground, I guess, what makes sense. And Julian just explained that very, very well.
And if you understand that, right, you understand, and there's a lot of questions, and I'm just going through my feed because I always want to answer your questions, right? So there is a question like, is there a slippage protection on Cake? Yes, there is, but at the same time, we're only actually adding only pools that have like a certain liquidity. So that way we are like trying to make sure that none of our customers has any kind of significant slippage, right? So I think that's really, really important. Another question there was, so how does the price of these decentralized tokens get created? Well, it's super simple. It's a supply and demand thing. So the more people want to buy these decentralized tokens, the higher the price. The more people mint those tokens, the lower the price. And that's basically how the entire kind of price then on the DEX gets created. What is important to understand is that at times, right, you need to expect that the DEX price actually can vary from what these I don't know, assets get traded in the real world. For the very simple reason, there is no physical connection. There is no price connection. This is super important to understand, and that's actually what is a key like distinction between these decentralized tokens being security. And so that's important. Some of you are gonna use this as like buying the dip kind of opportunities. You will see there's going to be massive opportunities in this from the trading side, from a kind of liquidity side. I think like this is this was the entire point that we have kind of discussed in the white paper that was kind of released a bit less than 2 years ago, when the blockchain in 2020 got started, right? That's what we always talked about, and now this feature is finally going live. So that is a key on difference here. I really want to make this clear. Robert also asks here, when is any kind of stir? To be honest, so any kind of swap on Cake DeFi is actually not done by Cake DeFi. For us, it's basically a withdrawal. So if you want to do a coin swap, what we're actually doing is we're simply withdrawing your coin to a DEX. And on this DEX, we're instructing the DEX on where the deposit should come back to. So what it actually is, it's actually a withdrawal and then a deposit. It's not really, so it's not Cake doing the swap, and that's important to understand. If these things take longer, the only thing that I could assume is that you're doing a larger amount and we need to check your withdrawal. Like that's literally the point. So we're not an exchange. We're not intending to be an exchange. I think most exchanges are gonna have to get regulated similar like banks do. And I think and I foresee the way our company is gonna get regulated is way more like a custodial wallet, which is gonna allow us to stay very compliance light, very nimble. And that is at the end what I foresee for us as a company. Whereas I think most companies that are exchanges have to go the Coinbase route and pretty much get regulated in every country, every state. Look at the issues that Coinbase has, Binance has. I think that's just nuts. Luke asks here, how can you get 1,000,000% per year? Well, it's very simple. The way these decentralized tokens receive their rewards is from the blockchain. And there were two factors taken into consideration that's completely automated, right? So there's no real decision making there. It's purely automated. It's a split between the volatility of these tokens. Obviously, something that's more volatile should get higher rewards because of the impermanent loss, and how much the trading volume is. And so the higher the volatility and the higher the trading volume, the more of the reward allocation these tokens get. So something that's super stable, for example, like the dollar, is going to have a lower a reward allocation. But because the trading volume is so high, its allocation there is super high because, I mean, everything is basically traded in dollars. So dollar, for example, DUSD just gets a super, super high allocation. And then you have obviously the exact opposite. For example, bonds. Bonds are not traded that much. They also, I mean, they trend down a lot, but they're relatively stable. So dTLT, for example, doesn't get that many rewards, and that's just basically how the functioning comes to. So now, when you look at this and you look at how much liquidity is in there and how much these rewards make out, the rewards right now are just so insanely high because the highest pool is the dollar pool, and the DUSD pool has $1,000,000 in, not close 900,000, but it's paying out so many rewards that the rewards is like tens of thousands of percent. And so, the question obviously you can have is, how do people gonna mint more tokens? They need DFI for that. So where do those DFI come from? Honestly, there's 4 places. First, they have them unallocated already, which is unlikely, but possible. Second, they have them in staking. If they have them in staking, they can unstake them. If they're frozen, they're unfrozen. They cannot unfreeze. They're done. Or they are in liquidity mining. At the moment, this is a consideration we could have. Maybe, for example, the only pool that would make sense here is the Bitcoin DFI pool. That these liquidity mining tokens could be used as collateral. This would be a bit of a double dipping. Could be possible to do this in the future. At the moment, it's not possible. So people would have to go out of the liquidity mining with Bitcoin and DFI and add this into the vault. Or option number 4, they have to buy DFI. And I made an entire video on why I believe DFI could hit $20 by Christmas. And it's just because I just foresee next week there's going to be an insane run for DFI. Because there's just so many DFI frozen. Tens of millions of DFI are frozen. Other DFIs are in masternodes, and I just don't think that people who actually run a full masternode are going to spin down the masternode, because a masternode is a very unilateral kind of investment with extremely low risk and very foreseeable and predictable rewards. So to me, there's actually only two places where people are gonna come and use their DFI from. It's either a Bitcoin DFI liquidity mining pool. Why? Because you can use Bitcoin and DFI. And if this pool drops, what's going to happen is the DFI price is just going to move even more aggressive against Bitcoin because this pool buffers less and less. So that's going to go extremely aggressive. So they take it out of the liquidity mining, or they have to buy any kind of unallocated DFI that are out there, and there's going to be a massive liquidity squeeze, in my opinion. So that is why I'm also very bullish on DFI price. That's also why we at Cake, and I mentioned this a couple of times now, from a company standpoint, we actually, just like we hold Bitcoin and we hold ETH, we now also started holding DFI on our balance sheet, and we even started buying some DFI on the DEX, simply because we believe it's a really, 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 really good investment to keep our purchasing power. So, yeah, it's I think super, super kind of interesting there. So, yeah, are there any other thoughts, questions, Fabio? In the meantime.
I guess regarding the stock launch, like maybe to sum it up, we're looking for liquidity pools that are sustainable. So we are looking around at 1 million in a pool. We have two pools that are almost there, so you can expect us to and maybe to double down on that. Technically, we are ready. We could implement this right now probably. But we just give it a little bit of consideration, a little bit of time, and you can expect probably one or two pools to be listed this week, and all the other pools will follow depending on what is happening on chain. I guess this is the most important question when it comes to when will this whole thing happen. So we have 6th of December, that is the start of the rewards. And maybe you can touch on one more point. You briefly mentioned this, but is there any educational material that will be published over the coming days or weeks?
Yeah, so there will be a lot of blog posts, explainers coming out. I will also do some video explanations on running this through. I know that DC and Lord Mark have done a lot of explainer videos on DeFi Chain YouTube channel. So these are all things that you should kind of refer to. On Cake, this is going to be relatively straightforward once we're going to activate a pool, because basically all it is, it's you instructing Cake which D token to buy on the DEX. So for example, you want to buy dTSLA. Okay, great. Then you buy dTSLA on the DEX. You withdraw basically, for example, DFI or Bitcoin or whatever you use to buy it. You withdraw that, it gets sent to the DEX. The DEX then deposits the dTSLA into your account, and then you can liquidity mine with that. So it's going to be a very simple, straightforward process on Cake. I think the more kind of explanatory intensive process is how do people on the blockchain actually create dTSLA, and that is a bit of a like a learning curve. Once you notice once, I think it's like, yeah, it's relatively straightforward. There will be a lot of videos, I assume, from community members and from people, and I really highly encourage, especially, I mean, the rewards are gonna drop. I mean, these rewards are not gonna stay at 1,000,000%, and it's just an absolute no-brainer that they're gonna drop, because at 1,000,000%, like everyone, their mothers, brothers, and fathers are gonna drop into those pools to get 1,000,000%, right? So by that, these pools gonna drop. Now, to what levels are they gonna drop? I don't know, but they're probably gonna level out with the staking and the other liquidity mining rewards. Now, the other key point there, though, is especially the first couple of weeks are going to be insanely attractive. So I would highly, highly, highly encourage you. If you're more of a DeFi chain native, kind of like I want to control my own keys kind of guy, then play around with the wallet, get ready, start minting those tokens. If you're the Cake user and you're like, look, I just want to like have a plug and play solution, trust me, we will offer a pool once we feel it is like with a high degree of certainty safe for our users to use. There's nothing worse than you expecting hundreds of percent if you start off with a minus 50% because you have so much slippage. And that's definitely not something that I want to kind of have with our customers. So yeah, kind of understand that a bit. I think that is really important. Sometimes I get questions on what's Cake's marketing gonna look like around this? I just want to again highlight here that this is like we are a privately held company. You like your like the way we do marketing shouldn't be of your concern at all. Because like whether Cake does good or bad marketing, that really doesn't affect you as a customer, right? So it's just like I don't know if you ever ask Coinbase how they do marketing. I again like let this be our sorrow and our worries. If you're interested in the DeFi chain marketing, I would highly recommend you go to the community funding proposals. I think there's a community funding proposal. Like there's a lot of community funding proposals on marketing. There's the DeFi chain, I think, accelerator. These guys, talk to them. What is their marketing? What are their concerns? I think there were a lot of proposals this in this last kind of cycle for various countries, for various languages. So go to people there and ask there, how does the marketing work? I really want to highlight my role. My role is CEO of Cake DeFi. Cake is going to focus on Cake. We're going to list any kind of project, any kind of coin, any kind of idea that is interesting for our customers. And our customers are customers that are customers that prefer the plug and play kind of style. They want to get access to various asset classes, to various ideas, to new kind of ideas. Obviously, they are interested in yield. And that is always going to be my role. And that is always going to be my main focus. Now, of course, I'm a hefty investor in Bitcoin. I'm a hefty investor in DeFi chain. I'm a hefty investor in Ethereum. Cake holds those three coins exclusively, right? So of course we have a high interest in all those three coins doing well. But that is it. So I just want to make this very, very clear on the various responsibilities. DeFi chain as a community is not responsible for Cake, and Cake is not responsible for DeFi chain. Now, just like Cake wants the Bitcoin price to double, I would love the DeFi chain to, I don't know, tenfold, 100-fold. Don't get me wrong on this, but I also want to make it very, very clear what are the responsibilities and what is our main focus points. Our focus point at Cake is delivering a fantastic service to our customers, list highly profitable products. The community on DeFi chain, their focus should be to build DeFi chain, to market it, build additional services on top of it. And I just really want to be clear on this. Don't confuse those two things.
I may have something small to add. We are already running over an hour.
Oh yeah, I can see
but
that now. Sorry.
There's two things I briefly want to touch on, and one thing is we were promising a few features from like there's a few VIP features that are marked with coming soon. We talked a lot about graphs and diagrams and things to track your investments and some smaller improvements that make the platform just more beautiful and more easy to use. And just one thing for you guys to understand, like our complete focus right now is to deliver these decentralized tokens to you and loans and all of these things. So our tech resources and design resources are focused on that to do this really, really well and really good. And this will take most of our time until the end of the year. We did not forget the other things. And they will come. Like, for example, so the diagrams and the graphs to track your investments, it is ready, but we were just thinking, hey, should we launch this now and then integrate decentralized tokens later, which also has an impact on these diagrams because there is more things to track and more things to display. So what we made a few decisions to focus on the products and the integration first, and then deliver the other things. And they are coming. Everything that is marked with coming soon, everything we talked about is coming, but we just want to highlight that we are focusing on other things first. And then the other thing is just some shilling at the end. We have this one promotion going on from Black Friday. The promotion is still running until Friday, the 3rd of December. And so if you onboard somebody and want to show somebody the platform, they only need to deposit $25 and they get a little bit of a higher sign-up bonus, around $50. And also for you, you get 50% more. So instead of 10, you get $15 for any referral. And there is one more element to this promotion, and it's the 5% freezer cashback. So if you put any funds into the freezer for 6 months or more, is it either an extension or new funds, you will get 5% cashback instantaneously added to your account, also in the freezer. So, and these things are running out. So you have approximately 3 days or 2.5 days left. consider it. And yeah, that's a little bit
Yeah,
of the
no,
shilling.
I love that. I think that's absolutely key. Again, you want to get ready. Get ready with your DFI, get ready with your vaults, become a Cake user, do your KYC, deposit, like join the Telegram groups. I think right now is a really, really good time. Like this is, I promise you, this is gonna go like over the next 4 weeks. You can make more money than you made the entire year. I'm not exaggerating when I say that. So the way to do this is you need to prepare. You need to sharpen the knife right now, sharpen the axe. And then over the next 4 weeks, it's just going to go bonkers. It's just like last year. We discussed this, I don't know, 60 times now on the show. I don't know. Like I cannot repeat myself more often. I think next Tuesday, when we do this Twitter space, it's just gonna go like, yeah, we're gonna kind of be presenting live and we're gonna talk about the madness that's going on when people are like liquidity mining for, I don't know, 20,000%. So they're gonna liquidity mine for, I don't know, 100% a day almost. And that's literally gonna happen. So there's gonna be people who are gonna, I don't know, add $10,000 and they make $10,000 a day. I really think that that's realistic, not because I want to FOMO or because I want to shill something, but because I've been there, done it last year. It was just insane. And when Lord Mark talks about this, when Fabio talks about this, when DC talks about this on like the DeFi Chain News show, they're not exaggerating. It's gonna go quite crazy. So yeah, get ready. Again, like I mentioned, we really want to be sure that for our cake customers, we have a safe and profitable product. And so we are going to list these products as soon as we consider them safe and profitable. And yeah, and I think that's a main criteria on this. And it has to start with safe because nothing is worse than losing money, right? So I mean, rule number one, don't lose money. Rule number two, never forget rule one. So yeah, with that, I'm sorry, we're over like 15 minutes a day. There's going to be a lot of stuff coming out. Join the Telegram groups, join the interactions. It's going to be a very, very intense December for any kind of cake baker. And so, yeah, I'm very much looking forward to having you on this ride. Yeah, with that, Fabio, thanks so much for all the great insights. Sign up on Cake, use the benefits, use those promotions, and then I'll hear you next week. Thanks so much, everyone. Fabio, thanks so much for all the great inputs and great insights. And yeah, have a good week. Stay safe, stay healthy, and yeah, a lot of wealth and good fortune.